Hey everyone, this is Yar Farouk and welcome to this trading course. Now, this is going to be everything you are ever gonna need. I'm gonna lay out everything I know from my 3 years in trading in this course, and it's all gonna be free. I promise there's gonna be nothing behind a paywall. You're not gonna have to pay for anything. It's all gonna be here on YouTube and on my Twitter. First of all, thank you to FT UK for making this course accessible to everyone. They sponsored it and now you're watching it for free. So thanks a lot to FT UK. Let's start. So we are on the first lesson in our course, which is Introduction to Trading, and I'm just gonna briefly tell about myself, what briefly trading is, and that kind of stuff. So who am I? I was a broke teen just a few years ago, but with my consistency, passion, and hard work, I'm now a consistent trader. I went from losing 90% of my entire portfolio to making 10-20x of it. And in this series, I'll just guide you how you can do that too. I'm not gonna promise you generational wealth. I'm not gonna promise you anything, but if you follow the steps I tell you, you are definitely gonna become consistent. I will show you all the realities of trade. It's not a get rich quick scheme, and I'm gonna keep it very real in this series. So yeah, now here you can see these are my failures. I'm breaching these accounts. Look at all these accounts that I have breached. And then from there, I got into consistently getting payouts. You can see the dates on the payouts: 23 August, September, and November. So you can see I'm consistently getting payouts from Profirm as well as from my personal account. So it was really a tough journey. I'm going to be completely honest with you, but I'm here to guide you all on that. So now let's get into a little bit of what trading is and why someone should go into this trading thing. So basically, if you talk about trading, it's just buying low and selling higher. Assume you have a chair which was worth $1,000. Okay, you bought it for $1,000, and now its value after 6 months is 1,500, and now you want to sell it. So if you sell that, how much money did you make? You made 500. So that is trading. This is basically trading. But what we are going to do is that we are going to do this in our electronic charts on real markets, like the indices markets, the forex market, and the crypto market. And why should one get into this trading thing? Because it has financial freedom. You can be your own boss, and it takes time while mastering, but once you master it, then it's not going to take any more time of you. You can just look into the chart for 1 hour or even 30 minutes to have different strategies. 30 minutes and you can be done for the day. You can take off whenever you want. You don't have to work as a team with someone if you are an introvert person like me. Yeah, these are all the perks of it, and that's why one should get into trade. Now let's get into a little bit more detail of it. So traders make money by longing the market or shorting the market, with or without leverage. Now, I know there's a lot of stuff going on right now. You might be confused what longing and shorting is and what leverage is, but don't worry, I'm going to guide you. So leverage is basically borrowed money that can be used to trade with. So for example, these brokers and these prop firms are exchanges, they offer you leverage. So let's say an exchange offer you 10x leverage. That means if you have $100 in your account, you can open $1,000 accounts with it. So 100 times 10, because that's the leverage. But you have to also realize that if the market goes down 10% or 20%, you are not losing for $100 position. You are going to lose based on $1,000 position. So if you open $100 trade with 10x leverage, your position size is now $1,000. If the market goes up 10%, you will lose all your $100 and your account will be empty. If you win 10%, then you're going to make $100. So that's all about leverage. You have to be really careful with it, or you can just blow your account up. Now, I talked about longing. So longing is basically buying an asset, which if price goes up, you're going to make profit from it, and vice versa. Longing is just equal to buy. Shorting is a bit different, and you might not understand it really well. I didn't as well when I was a beginner, but I just knew that it means selling. So basically, shorting is selling an asset. So let's say there is a Bitcoin, which is at $100,000. You sold it there, and now its price is at $90,000. So you made profit from it. But now you might have this question of, but I didn't even buy Bitcoin. How do I sell something that I don't own? So here's a real world example to help you understand this. Assume you borrowed 1 gram of gold from someone, and you tell that person that I'm going to give you back gold, 1 gram of gold, after a certain period of time. You didn't tell him that you are going to give him whatever the value of the gold was at that time. You ask him that you're going to return 1 gram of gold. So as soon as you borrowed that 1 gram of gold, you sold it right away. Let's assume its price was at $60, and then when it's time so as soon as you sold it, you now have $60 in your pocket. Then when it's time to give it back to the person, give the gold back to the person you borrowed it from, assume the price of gold was $20 at the time. So now you have $60 in your pocket. You will go and buy 1 gram of gold for $20 and give that person his gold back. So now you are not in debt, but you still got $40 in your pocket. This is basically shorting. This is the easiest way of explaining shorting or selling to anyone. And in the same case, if let's say gold prices jumps from $60 to $80, then you lost $20 here. So there is loss in here as well. So yeah, that's about shorting. I hope this was clear as hell. Then we have different styles of trading, and it is based on the frequency and the average trade time. But first we have scalping. Scalping is basically a high frequency trading method where people buy and sell a lot of times in a day, and they just target small price movement. For example, if we talk about in Bitcoin's language, traders who actually capitalize on $100, $200 moves, they are basically scalpers, right? Then we have day traders. Day traders are also called intraday traders, and what they do is that they try to catch the range of a daily candle. So assume if Bitcoin moves from $2,000 to $4,000 in one day. Just assume, it's a hypothetical. They will try to capitalize on that $2,000 move rather than looking for multiple $200 trades or $100 trades. This is basically day trading. And then we have swing trading, and this is mainly for the people who are not free, who have jobs, and they can't look at the market all the day. This is the best for them. So in swing trading, a trader holds trades for a few days to a few weeks, and they try to capture the entire daily or weekly trend. So if you open your USD chart as of 27 June, it is trending to the upside on the weekly chart as well as the daily chart. So what swing traders do is that they will try to catch that entire weekly or daily expansion or trend, and it's going to take a lot of time. These trades you can hold position for days or even weeks. And then we have investing, and investing is like buying things like stocks or even cryptos or even currency, and you actually expect slow growth from it. It's a kind of passive income. You have this mindset that you are holding this trade for like years or for even like coming 5 years or 6 months. And yeah, that's about investing. Investing is generally for the people who have a lot of money, because usually in investing you do not get that much up gain. If let's say you bought Bitcoin at the very bottom at, let's say, $20,000 a few years ago, it would have been 5x right now. Your money would have been 5x right now in 3 years. But now think about the capital that you have. If you had $1,000 and now you made 5 times of it, it's not really that much money, right? It's just $5,000 in 3 years, which is not a good money. But if you have, let's say, $50,000 and you bought Bitcoin there and now it has 5x, now you have made $250,000. Investing is generally for the people who have lots of money. Also, when we are talking about capital, many people actually have the issue with capital. They don't have that much money, especially from people from the third countries. They face issues with saving up money because they don't earn that much. So I think there is a solution to that as well, and it is basically moving towards prop firms like FT UK. So they basically, what they do is that they give you capital to trade with, and I'm gonna get into more specific of it later on in this course. But if you ever have this worry in your mind that you don't have that much money to spend on trading, don't worry, you still got it, because there are companies out there that are trying to help you get capital and trade as you want. Thank you for making it to the end, and if you want this PDF file, I have attached the link to my Telegram in the description, and you can find it there. As I mentioned earlier, this course will be released completely for free here twice a week on my YouTube channel, once on Thursday and then another lesson on Sunday every single week. So make sure to subscribe and press that notification button to make sure you not miss any of the lesson. Goodbye.